Hello and welcome to Prime Property, your weekly real estate reckoner. I'm Nayantara Rai and this is what we have on the show today. 2014 promises to be an encouraging year for Bangalore's commercial market. A sudden surge in demand is expected to push up rentals. Hospitality giant Accor has lined up big plans for its portfolio of brands like Sofitel, Novotel and Ibis. Accor plans to double its hotel count to 50 over the next 2 years. We get an exclusive conversation with Accor Group's global chairman. We answer viewer queries on Property Doctor this week with commonflow.com. 2013 was a terrible year for Bangalore's commercial property market, with absorption of new office space plunging 40% according to Cushman & Wakefield. 2014 promises to be different. Demand for new offices is back, and as Vinita Atre reports, developers are expecting a major surge in rentals in the coming quarters.
IT research and large data storage companies are hiring again, and as the recovery takes hold, Bangalore's commercial real estate industry is reaping the benefits. Experts say that over the last 3 months alone, the market has been flooded with domestic and foreign companies expressing interest in ready-to-move-in spaces totaling 4 to 4.5 million square feet. That's over half of last year's annual absorption.
In 2013, the overall absorption in the market in Bangalore was between 7.5 and 8 million square feet. We are already seeing a sizable interest levels in the first quarter, which signifies that this year we would cross that number. Having said that, the only consideration that we should keep in mind is that the supply needs to keep in pace with the demand.
Demand for space is quite high. Prime Property learns that some of the bigger interested parties include Flipkart, which is looking for a massive 1 million square feet facility, Accenture, which wants 200 to 300,000 square feet space, Capgemini, which is looking for 300,000 square feet, and Amazon and KPMG, both of whom are hunting for 400,000 square feet each. The IT capital Bangalore is also India's largest office market, and IT hubs in the city like Whitefield, Marathalli, Electronic City and Outer Ring Road, which house tech giants like Infosys, Wipro, IBM and Cisco, are all getting saturated now, which makes it harder for the likes of Flipkart and Amazon to find good grade A office spaces in these areas. So all those corporates who are looking for large swanky offices have no choice but to move to newer areas like Hebal and Yelahanka in North Bangalore, which are promising to be the new commercial hubs. But guess what? Despite the surge in demand, we understand that the rentals in these areas have been going up only marginally over the last 3 months. Here's a look at where they stand as of now. Not all. There's another reason for builders to feel enthused. What has developers like Prestige, RMZ, Embassy and Bagmane really excited is the fact that now a significant number of companies are unusually looking to buy out their own office space instead of leasing it.
The thought process in this is if a company based in the US has got access to funds at cheap interest rates, say the 2-3% interest rate, and they get those funds here and they buy real estate, and if you take the cap rate, it will be much cheaper for them to buy, and then it's like sitting in a property with half the rent.
Whether companies choose to buy or lease, one way or the other, Bangalore seems to be heading for a supply-side bottleneck soon. Developers are happy that this could mean an uptick in prices. But the concern is that if demand continues to intensify at the current levels, the second and third quarters of this calendar year could see a sharp supply-side crunch. In Bangalore, Vinita Atre.
Now into the hospitality sector. Paris-headquartered Accor Group is planning to double its hotel count in India by 2015. Accor hasn't had a smooth run since it first checked into the country in 2006. Accor's joint venture with realty firm MRMGF to open 100 budget hotels under its Formula One brand never took off. But its partnership with Interglobe, the owner of Indigo Airlines, for the Ibis brand of budget hotels is going strong. The group continues to be bullish on India and has lined up big plans for all its brands, including Sofitel, Novotel and Pullman. Manasi Gilani caught up with Accor's global chief. Here's a slice of that exclusive conversation.
What is really about India that's attracting Accor?
We have 25 hotels today. We're going to be doubling 25 hotels to go to 50 hotels within the next 2 years and 14 new hotels in the next 12 months.
Okay.
And we have a pipeline of probably an additional 60 hotels in the next 5 years. So the size of the country, the size of the population, the number of inbound, outbound tourism, the size of the GDP, we need to be here and we want to be here, but we want to be here with local culture and basically local talents.
Right. So in terms of investments, I mean, if you were to give me an absolute figure, a ballpark of how much are you looking at investing in the next 12 months?
That we don't say. As much as necessary. No,
okay.
we have a lot of investment in many different countries. And you know, Accor, we open one hotel every 2 days in the world.
Okay.
In Asia Pacific, we open one hotel every 5 days. And here we're going to be opening probably more than one hotel every month in India.
So this is going to be, you know, a core operational or the management team that Accor is going to support the partner, or you're going to be involved also at developing it?
We will be involved on also developing side by side, probably why not investing alongside our partners, but we have the expertise on running hotels, on distributing hotels, on service clients, on the development, on the construction. We have to rely on local expertise here.
How does your business strategy really go about when you're looking at a partner in a country like India that's been dealing with a crisis for a while now?
Well, clearly, the objective for us is to be more and more asset light, which means that, I guess, to be really the operational people, but not to be the primary investor. If it takes us to come along and to join the investor, we'll do it, but we're always going to do it on a minority investment.
Okay. Accor as a group has always been known for its luxury hotels. So you also have mid-segment and economy, which I clearly know.
Which is big.
Which is pretty big. But is that going to be the focus area now, since you think there is a need that India really needs to cater to?
Well, the biggest development for us in India is in the Ibis hotel segment, which is the economic segment. So for the next 2 years, we're going to be opening 13 new Ibis.
Okay.
Novotel, which is a very strong mid-scale segment, we're also going to be opening 8 Novotel in the next 2 years in India.
Okay.
So the vast majority, 2/3 of the development for Accor in India is in the economic and mid-scale segment.
The reports about having Accor looking at GVK of Mumbai International Airport land as well to acquire or to at least lease out. Is that a part of this plan?
It's critical. I mean, I landed yesterday in Mumbai airport. I mean, I have to say this is a phenomenal airport. So, which is why we need to actually be talking, listening, sharing thoughts with the local authorities.
Okay. So this is the GVK land is the one that you're really looking at this year for sure.
On specific, I don't answer.
When you're mapping India with the rest of developing countries or other South Asian countries, whether India really feature? Is it in the top 3?
Oh yeah, it is. It was not for a long time. For example, out of Asia Pacific, we have almost 600 hotels.
Okay.
And we only have 25 hotels in India. India was only 4% of Accor Asia Pacific. It's going to be 15% in 3 years.
What would be your strategy to really beat competition? Or because several of the names have been also looking at the segments that you're looking at now.
Every country we operate, we do it with local talent, local culture, and basically trying to insert ourselves in the local community. What we say for our products, it is born in France, made in India.
How do you see Accor's portfolio as a whole to pan out in the next 3 years, including India?
Yeah, we have 150 hotels in China today, and we're going to go to 250 in the next 3 or 4 years. We only have 25 hotels in India.
Okay.
India is almost the size of China.
Okay.
So 25 is way too little. We will be at 50 in 2 years. This is not enough.
But it's interesting when you say that, because a lot of hotels we know in India are up for sale. So in a scenario like this, how are you so confident about India? Because the local developers or local hotel operators are not very bullish.
No, but I guess, again, hotels for sale, maybe would be a buyer of those hotels being sold.
Okay.
So for me, whether it's buying an existing hotel, whether it's converting office building into a hotel, whether it's doing greenland development, Accor has all the optionalities they don't have.
So the option of buyout is definitely open.
Oh yeah, everything is open. But for me, I'm bringing clients, distribution capacity, digital innovations, all the things, mobile applications that I guess India is very good. But one thing India has, you have an incredible talent pool.
Well, on that note, we're going to slip into a short break. On the other side, it's time for Property Doctor, where we get experts to answer your queries. Stay tuned.